Good afternoon and welcome to this week's Forex and Cryptocurrency Analysis webinar. Hope you all had a wonderful week. It's been a great week with the markets and the currencies moving all over the place, and we've been catching all those moves. Hope you all caught the moves, and if you've been watching these webinars, you must be making a lot of money. I'm sure you can actually see how much money the accuracy of these webinars so far. Right, so stay glued. Today I'm going to show you a bit about the relationship, the mathematical relationship between the Elliott Wave theory or the principle and Fibonacci. Okay, so there is actually a relationship there, and it is actually an amazing thing to look at. Obviously, I'm limited to time here. It's not going to be. I'm just going to take about 10 minutes to explain in a nutshell an overview of this relationship. Most of this we cover in detail in our course, right? So stay glued. It's going to be interesting. I'm actually amazed with the way nature works. Okay, so let me just disable that. Somebody has annotated on my screen. Okay, let's get my annotation out. Okay, so let us start. Okay, let's start with the formalities. Just for those that will possibly be watching these videos for the first time, I've got here on my videos, if you go to my channel, each and every video since the beginning of January has now been linked via timestamps. So what that means is each and every pair has been linked with timestamps. So if you're looking for any specific pair, you do not have to go search around and struggle to look for that pair. You just go here to this list here, and there are links here to the start of each and every pair analysis. All right, so somebody has made a comment that they could not see a certain pair. So just come here and look here. For example, oil that they were looking for was actually here listed. So you just click on oil and you will see the analysis on oil starts right where you will click. See, so that helps a lot. You can actually track the history of these webinars. You can pick any 10 pairs for ease of research to go and see how accurate this has been. One of my favorites so far this year has been EURCAD and PoundCAD, and especially EURJPY. You should say, hang on for EURJPY. We've been peep accurate with this pair. Okay, it's been so accurate. So about the course, there's been a bit of an error on the emails that I've been sending out to everybody who's making inquiries about the course. I've been saying the next course is in May. We're already in May. So the next course is actually in July. That's actually next week from the 11th to the 15th. So if you had sent me an email and I responded with the email saying the next course is in May, please note that is an error. The course is actually next week. All right. Okay, so let's just get that one right. Okay, so let's get started with the business of the day. So as I said last week, I said I'm going to give you about a 5 to 10 minute tip on the theory each and every webinar. So this week I'm going to show you just in a nutshell an overview of why there is a relationship. Okay, we've been off there. I hope we're still on. Okay, why there is a relationship between the Elliott Wave theory and mathematics, and that is the mathematics based on the Fibonacci theory. Okay, are we still together? Is everybody still on? Okay, awesome. So let us get started. So it is important to talk about Fibonacci before we talk about the wave theory and a bit of a history about Fibonacci. So we all know that Fibonacci was an Italian mathematician. His real name is actually Fibonacci was his nickname. His real name is Leonardo of Pisa. Okay, so he was popularly known as Fibonacci, and throughout the history he has been known as Fibonacci based on the work that he has concluded. Okay, so there is, I don't know if any of you have read the capsule summary by Frost and Proctor. There is an error on their history of Fibonacci and the Elliott Wave theory. They say, and I'm quoting, when Elliott wrote the book called Nature's Law, he referred specifically to the Fibonacci sequence as the mathematical basis of the wave principle. So that statement is incorrect. So remind me if I do not tell you why that statement is incorrect as soon as I get started with the chart. If I get started with the chart without explaining why that statement is incorrect, please remind me, because that is very important. Right, so in the 1200s, Leonardo of Pisa, or Fibonacci as popularly known, he published a book called Liber Abaci, or rather Liber Abaci, that is called the Book of Calculation. Okay, so this book was introduced a certain number system, and we're going to talk about a bit of that right now. Introduced the number system with an annotation with a zero annotation. So most of the systems that were or that has been used in the earlier times before Christ and early ADs and all that, they did not have zero as an annotation. Okay, let me just get my annotation tool here. So this simple number that we all know, that is so popular, have you ever asked where these numbers come from? Okay, these numbers, a simple 1, 2, 3, 4, 5, 6, 7, 8. If there's anything that I have learned, is that you must not take anything as obvious. Okay, obviously there's supposed to be a 9 and 10. You must ask yourself where these numbers come from and what do they mean. Okay, so this was a number that was discovered. This was a number system that was discovered by Fibonacci. It was actually the first number system that had a 0 as the starting number. Okay, before that there has been other systems like it's called the Babylonian system that had numbers, but those systems were very complex and very difficult to use. Okay, so Fibonacci came with the concept of the 1, 2, 3, 4, 5 numbers, and the importance of these numbers. Okay, we know that it's 0, 1, 2, 3, 4, 5, 6, 7, 8, 9, right? But you know this value has got a value of 3. If it is 3, you know it has got a value of 3. If it is 4, it's got a value of 4. If it's 8, it's got a value of 8. But in this case, if you had a 5 and an 8 on the same sequence, the 5 here has got more value than the 8. So it also has to do with the position of the number in the sequence. So the value of the number has to do with where it is placed in the sequence, as simply in this case. So you will see here, this 5 here represents 50, and this 8 here represents the actual 8, right? But then if it was 8, 5 like this, then we know that this one represents 80 and this one represents 5. Then this one has got more value than the 5. Okay, so that's just one of the things about these digital numbers. Okay, all right, so let's carry on here. So as I've said, the Babylonian system, don't worry so much about the history, was one of the first systems to use the 0 as the first number in the digital system, and then Fibonacci came and made it very simple. There was also the Romans, the Romans who used the Roman numerals with 7 letters. That is the 1, 5, X, L, C, D, and M. So those numbers were very complex to use. Okay, so they were very complex to use, and because they were so complex, their addition, subtraction, and multiplication was so complex, especially when you had to do bigger numbers. So they used a system called the Abaci, or the abacus. So the abacus means it was a board. I'm going to show you what the abacus looks like. I've got a picture here of the recent abacus that I can show you what an abacus looks like. Let me see if I can find it here quickly. So what I'm showing you here is the modern day abacus. So you can imagine what this thing looked like in the earlier centuries, in the early centuries. So this is an abacus. This is a system that they used to do calculations because they did not have the 0 system. They did not have the digital system. So the shopkeepers and every businesses, they used this thing here. So if you go to Google, you will find the ancient one and how it looked. So you'll see that each and every row has got 10 pieces here. That's what they used to add and subtract and divide. Okay, so that's the thing that they use. So Fibonacci came with a concept of a digital system. Okay, let's go back. So I'm going to show you something very interesting and how his sequence was developed. And this is the stuff that interests me because it is mathematics, you know. And as I've said, most of you know my background. I'm a mechanical engineer by profession. Okay, so I've done a lot of calculus at school, and when I look at this now while I'm trading, and some of this I'm only discovering now. I did a lot of maths which I never knew I would apply in real life. So here's the thing. So this was the phenomenon in which Fibonacci based his number sequence. So he said, and listen carefully, he said, if he wanted to find out how long it will take one pair of rabbit to produce a pair of rabbit in a single year period. So basically we start with a pair of rabbits, one rabbit pair. Okay, we start with a one rabbit pair. So this pair of rabbits will produce a single pair each month. Okay, let me clear this here and put this one. I want to have the whole space here. So we're going to start with one pair of rabbits. Rabbits, right? I hope I don't run out of time here. So he said one pair of rabbit will produce one pair of rabbits in each and every single month. So we've got month 1, month 2, month 3, up all the way up to 12. Okay, so if this one produces a rabbit in the second month, okay, we'll have a rabbit in the second month, right? Because it takes a month to produce a pair. Okay, we'll actually start with no rabbit in the first month. So that very first pair will produce a rabbit in the second month because it takes a whole month. So second month we've got one rabbit and we've got the original one. Third month we are going to have the original rabbit and the second one. So these two rabbits are going to produce, so this one is going to produce the next rabbit. Okay, because this one is still a young rabbit, does not produce. It will take a month to produce. Coming to the fourth month, now we've got the original rabbit and this one, okay, now producing a further two rabbits. So adding the further two rabbits from the previous ones will give us a further 3 rabbit pairs in the fourth month. Okay, so this sequence is going to go on like this. So we've produced these 3 now, but these 3 in this month, in the 5th month, they are not going to produce. What is going to produce? What is going to produce is these first 2 rabbits. This is first 2 rabbits, and those rabbits are going to have now a 5. So the sequence goes, and you start getting a number sequence that is so familiar, which is this 1, 2, 3, 4. Not the 1, 2, 3, 4, 5. This number sequence that we're also familiar with. 1, start with the first rabbit, second rabbit produces 1. So the next one is only going to be this one that produces again. So you get 2, you get 3, you get 5, you get 8, you get 13, you get 21, and so the number goes. Okay, so eventually after 12 attempts, we are going to have a total of 144 rabbit pairs. And that is the number sequence that Fibonacci has developed. So let me just show you on a picture so you can see it clearly. Let me show you the picture of the rabbits, of the rabbit pairs here. So here it is. So this is how it starts. It starts with a 0 actually here. Okay, this is the first month. You start with 1 pair, you'll have a 0 here. So the first one will produce 1 pair, in the second month actually. But this second month, remember, this one does not produce. So if this one does not produce because it's still young, this was produced in the first month. It was produced, but this one does not produce the rabbit. Okay, what is going to produce the rabbit is only going to be this one in the second month. So we've got this one now in the second month. So in the third month, you look carefully now, who is going to produce the rabbits? This one is still new. You've got the first one, and that was produced in the first and the first month, right? So now it means in the third month, we're going to produce 2 rabbits. Check out in the third month now, not like that. Check out in the third month, the rabbit phenomenon. in the third month, the fourth month, who's going to produce the rabbits? You've got these two that are not going to produce. You're going to have this one producing, and the first one producing. So you're going to have 1, 2, 3 rabbits being produced in the fourth month, like that. Okay, so 3 rabbits have been produced there. We are going to the 5th month. This is not going to produce. Who's going to produce? It's going to be 1, 2, 3, 4, 5 rabbits. That's why you get 5. So when you get these 5, this 3 is not going to, this 5 is not going to produce when we come to the 8th. So what do we have? We have 3, 4, 5, 6, up until 13. That's why we keep getting this number sequence. Okay? So, and so the number goes. So these numbers actually can form, you find them on this Fibonacci ratio table. But before we even go to that Fibonacci ratio table, just look at something interesting here. As this sequence, if you look at this number of sequence here, as this sequence goes towards the end, if you start dividing the number by its next by its next number, like for example, if you do 13 divided by 21, you get 0.618. Okay, if you divide, the next number here is supposed to be 34 and then 55. So if you divide 34 by 55, you get 0.618. So if you keep dividing, especially towards the end of the sequence, you keep getting this 0.618. That is a very apparent number that we are also used to. And if you do this, if you do something like this as well, if you divide instead 5 divided by the previous number, you get 1.618. If you divide 8 by 5, if 8 divided by 8 by 5, you get 1.618. You see all those numbers that we are so familiar with. If you divide 21 by 13, you get 1.618. Those very popular numbers that we are so accustomed to. Again, on the same number sequence, if you do this, if you divide 3 and skip one number, okay, 8 divided by 3, okay, or 3 divided by 8, you get 38.2. If you divide 21 by 8, you get 38.2. You see how apparent these numbers are. So this sequence, you can do so much with this sequence. There's so much you can do with this sequence. I mean, I see there's a question in the chat box. So this is actually very interesting. There's so many things that you can do with this sequence of numbers. Okay? So now, this is the rabbit tree cycle that Fibonacci used to develop this table. Another thing also here to note is that if you multiply any of these numbers, for example, if you multiply any of these numbers by 4, multiply from 2 actually, you don't, except for the first 2, if you multiply any number of these by 4, any of these by 4, any of these by 4, let's give it a test. You're going to get here 8. If you add 1 to each and every Fibonacci number, you're going to get here 12. You're going to get here 20. By 4, you're going to get here 8 by 4 is 32, right? What is 8 by 4? 34. Somebody help me with the maths. Okay, multiply by 4. Okay, so from here, if you start with that Fibonacci sequence again here, it's 32 actually here. So if you start that Fibonacci sequence, 13 by 4, 26, 52, I think. Okay, you'll help me out here. If you add the Fibonacci sequence here, the 1, 2, 3, 4, 5. If you add the 1, 2, 3, 4, 5 here, the first one here, if you add 1, you get 13, 20 here plus the following number, which is going to be actually if you add 1 in each and every number, okay, we will give you that Fibonacci sequence again. Okay, just not getting it right exactly as it is right now. Okay, so somebody's talking about the geometric and arithmetic progression. That is another very important factor for discussion of another day, the geometric sequence and the series. Okay, so here's another thing that was developed. So important to note that Fibonacci was not the only person whose wave who the wave theory was based, whose work the wave theory was based. There was also the Pythagoras. Okay, I think I've got 5 more minutes to do this now. There was also Pythagoras we all know the Pythagoras theorem, which says the squares of the two sides are equals to the sum or the square of the sum of the two sides. And this Pythagoras square will give you something like this. So you start with this square here, start with a square like this, 2, 2, 2 here, and the 2 here. So from there you get this length here, which is the hypotenuse, and the hypotenuse is x being equals to the square of 1 squared plus 2 squared. That gives you √5, and you add that length to this and it gives you the Pythagoras square, okay, or the golden square. So from this golden square comes the golden spiral. So you can actually develop that golden spiral from this, okay, from this. Okay, so why am I talking about all these things about Fibonacci and the Pythagoras and all that? Okay, there is something very interesting about the patterns that Elliott developed. Okay, we've all read about the patterns that Elliott developed. Do you know how many? Do you know the grouping of those patterns? This is where the interesting part comes. Okay, so we've talked about this. We've seen how prevalent Fibonacci is, how prevalent, how organized Fibonacci, how the world is so organized based on the Fibonacci sequence and the theory. So now let us look at something that is abstracted from Elliott's theory. Okay, so simply just based on the number of patterns that Elliott has discovered, you will see that there is a Fibonacci sequence that happens here. Let's just talk about the basic form of the wave principle. There is one basic form. Okay, this is the basic form. This whole thing, what is that one basic form? It's the impulse and the correction. We all know that. We all know that the Elliott wave theory is based on the impulse and the correction, right? And there are two modes. Okay, there are two modes. The one is the impulsive one, and the other one is a corrective one. We already have one, remember, one basic form. Now we've got two modes, or the classes of waves. The one is impulsive and the other one is corrective. So we've got two. Okay, let's get that all off. See something very interesting here. And we've got three groups. Okay, we've got three groups also. We've got an impulsive group, we've got a simple corrective group, and a double combined correction. What does this give us? It gives us three. Okay, we're just listing all the things that Elliott discovered here. We're not even doing the maths. Now, we've got two orders of patterns. Now, look at this. We've got fives. Remember, this is the impulsive leg. We've got fives, we've got threes. These are the simple corrections. We've got triangles as well within the corrections. We've got simple triangle correction. It's simple as well, even if it's 5 waves. Okay, from the combined side, you've got a double correction and a triple correction. How many are these? This is 5. Okay, let's carry on. We've got 13 families of 13 patterns. Okay, we've got 13 families of patterns. The first one is an impulsive one. From the fives, okay, remember we're splitting the impulse now. We know the impulse, we've got the impulse in the diagonal. And the diagonal is also a motive wave. That's 1, 2. So from the split of the corrections, we've got how many types of correction? We know the threes. We've got the zigzag, the 3 variations of flat corrections, and the triangle. How many is this? 2, 3, 4, 5. Right? On the corrective side, you've got combination. You can get a double combination of a zigzag and a flat. 1. A zigzag and a triangle. A flat and a flat. A flat and a triangle. How many is this? 1, 2, 3, 4. On the triple, you get zigzag, flat, flat, zigzag, flat, triangle, flat, 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 triangle. How many is this? This gives you 8 on this side. 5 plus 8 this side. What does that give you? It gives you 8, and then you get then 5 plus 8 giving you 13. Look at this sequence. Does this look familiar here? And we are not, this is not even maths. This is not even maths. We're just talking about the things that he saw in the patterns. Variations on the 13 simple patterns total. He got all of this in total, 13 patterns. This is the Fibonacci sequence. Okay, this is the Fibonacci sequence. All right, and as an engineer and somebody has done a lot of science at school, this stuff interests me. Now look finally on this one here. The same thing that I have been talking about. You've got a pulse and a correction here. Look on this side. On this side, we've got one wave. You've got one wave. That gives you 2. This side is the pulsing side. This is the pulsing side. This is the corrective side. On the pulsing side, you've got the one wave, which is this one. The next one, subdivisions, gives you 5. If you keep dividing here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. That is the second number sequence. If you divide this further, you go to the 89. Similarly, on this side, you're going to get, firstly, 3-wave correction. That is your 3. If you divide sub further, you go to 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. That is the next sequence. If you divide further, you get 55. All of that is giving you the Fibonacci sequence. Okay? This is giving you the Fibonacci sequence that we're so familiar with. Okay? Well, so what was that interesting that I was talking about that relates, that I wanted to quote? I actually want to quote from the book that Elliott wrote himself. I want to quote his words, what he said. I think this was the first one. As you'll see very interestingly here, I think that one was in page 194 here. That was the most interesting part for me, other than everything that I've shown you so far. Let's just find it. It's on page 194. I hope I can find it, if I can remember where it was. Let's see if I can find it. Otherwise, I'm just going to code it for you. This is 196. Okay, so what I wanted to say here, and I'm hopefully going to find it for you. It is better if I'm reading it for you guys here. Let me just see here. I think it is on page 196. I don't know if it is 196 on this here. Right, yes, here's the part I am looking for that you can read as well. This is based on Nature's Law by Elliott. Read what it says. I'm going to quote it for you. This line. It should be noted that when I discovered the wave principle action of market trends, I had never heard of either Fibonacci series or the Pythagorean diagram. That is Elliott. That is Elliott who says that. He had never heard of that. Elliott only discovered his wave theory around the 1930s. Fibonacci and the Pythagoras was before Christ, some earlier centuries around the 13th century. So Elliott says here, he had never heard of this, but it was very exciting for him. It was naturally gratifying to me that these old mathematical principles that were laid down centuries ago simply substantiate the validity of present-day application of basic law to practical use. Okay? So, Elliott did not know Fibonacci. Pythagoras did not know Fibonacci. Fibonacci did not know Pythagoras, but all their works are confirming the same thing, that the world is governed by law. So here's another thing about law that I want to quote that is very important, and which is why we look for these patterns here. So excuse me, I get very excited when I look at these things. Nature's law. Let's see if I can find it. All right, so since the very character of nature herself works in this way, since the very character of law is order, yes, that's the point I'm looking for, or constancy, it follows that all that happens will repeat and can be predicted if we know the law. And that is what we're trying to do here, to understand the law that guides this phenomenon. Okay, so this is why the Elliott wave theory is so accurate, and especially if you've got the right interpretation and you understand it correctly. Okay, I thought I was going to spend 15 minutes and I'll spend half an hour. I hope this was interesting for you and it helps you somehow. Okay, obviously this is in a nutshell, but the basics and the fundamentals of this is so deep, other than what I'm just showing you here in a half an hour. Okay. Can you go to the more realistic, or in inverted commas, realistic stuff for today, which is our webinar? Okay, hopefully we'll be able to get through all the things that we wanted to look at. Okay, happiness everyone? Okay, let's see if I've got people here in the room so we can get started. It's been quiet now. All right, good. So let's get started. Right, so Euro. Euro US dollar. So Euro US dollar, we have been looking for this pattern here that has ended this wave 5 right at the top. And we have been forecasting here that we are looking at this as a 1, 2, and we're looking at this lower degree 1, 2, 3, 4, 5. 1, 2, 3, 4. See the 4 that we built, we knew that we were going to get a bounce here. We got it, and then we moved down. And we've been looking for a bounce in the red wave 4. Okay, so that was what we're going to be looking at. We'll be looking for this color here, not that color. Excellent. 1, 2, 3, pull back. Okay, so that's what we're going to be looking at here. So how does this look now? We have got already an impulsive move here, and we're getting a correction here. So a break of this flag will take you to this level. Okay, so we don't know if that wave 4 is going to be a single wave. You saw the number of patterns that Elliott has discovered. It's not just single corrections only. You get complex corrections as well, and the different types. Right, so you've got 1, 2, 3. So you can possibly get another 1, 2, 3 that does something like this, that does something like this, which can then be a wave 4. Okay, but for now, the next immediate move that we're looking at is a further bounce to the upside on Euro US dollar. Okay, this is the 4 hour. If I just go to the 1 hour here, if we just go to the 1 hour, all right, you see here it has made an impulsive move, and now it's made this 1, 2, 3 wave correction. It's actually a correction like this. We already have a passing move to the upside. You won't see it because of a spike. I think this was during NFP. You already have a passing move to the upside. So you, instead of looking at this whole correction here, if I switch off here, instead of looking at that whole thing there, you can look at this as an impulse. This is a passing move here. You're looking at this correction. You can get a very good entry. Put your stop loss under this anyway. Okay, and the DXY. DXY is similar. It's just the inverse of Euro US dollar. Euro US dollar. So similarly, we are looking to build that wave 4, and this is what you will be looking for. You already have a 1, 2, 3 wave, and now you're getting a pass down, you're getting a correction. So you're expecting a move to the downside. So not all the way down, because we're only looking for this to build a wave 4. So we may just get that, which is a similar flat correction in the opposite direction for further upside. So the next immediate move is to look out for on the DXY is this corrective structure here, break to the downside for wave 4, similar length to that, around that area. Okay, and then pound US dollar. So all the US dollar pairs now, the bounces that we've been looking for the last 3 weeks are now starting to happen. Let's go 4 hour on pound US dollar. So pound US dollar, I don't know if you want to look at that whole structure again, just for the benefit of those who have not seen the whole structure. The whole structure here. So we've been forecasting this for the last couple of days. So the move down here is not a surprise. So now we're looking for a bounce here. Okay, any bounce, something like this, will be propelling for a further move to the downside. So a bit of a sideways for the next couple of days here. The bounces to the upside will be very tricky. Just give me a second, guys. Okay, I'm recording again. We're back on. Sorry about that. So that's what we're going to be looking at on pound US dollar. If I go to the 4 hour chart, you already have the divergence there showing that you're going to have a bounce. So divergence doesn't mean you're going to get all the way, a reversal that goes all the way. It just means you are going to get a turning point. You're going to get a reaction around that level. Okay, so that's what you're going to be looking for, a reaction. It's actually very risky to take the buy there, but that's what we're going to be looking at on all the the US dollar pairs, even the pound pairs actually, as you'll see when we go along with the analysis. Okay, so that's what we're going to be looking at. Right, so pound US dollar, that is pound US dollar, US dollar CAD. US dollar CAD has made an interesting move. Okay, we've got a pulse there, we've got a pulse there, and now we're looking at this as a 1, 2, 3, 4, 5, as a 1, 2, 3, sorry, 1, 2, 3 move down, and we're looking for this to come back down here. So I actually wanted it to come all the way down looking for a regular flat, but you can see here we're getting a running flat, something like that. This is a running flat, it's already reversed there. So we're expecting the US dollar, I was expecting the US dollar to pull back, but typically this pair, you'll find that it does opposite to what the US dollar does with in relation to other pairs because of the CAD that is paired with. So remember, correlation is not a blanket approach. It depends on who the market, the big market mover is between the two pairs. So typically you'll find that the CAD has got a huge factor on US dollar CAD. So here it looks like you want to get one more up, okay, regardless of whether US dollar wants to go down on the other pairs. Okay. Great. I see John says he's also an engineer. So yes, when we did all that calculus and the physics and the science at school, never thought we'll apply it. And I've never really applied it in my real job as an engineer. Most of it, I've never applied Fibonacci, the Laplace transforms and all those things. Never really. All it has taught me is was to have an analytical brain and an inquisitive brain. That's all. But otherwise, since Forex, I have been able to apply that knowledge practically and to be able to do something out of it. Okay, that's US dollar CAD. So look out for a short move to the upside there. Audi. Been trading waves for the last 4 years or so. Right, so I'm just answering the question on the chat box. So look at Audi US dollar. Interesting. Interesting Audi US dollar. Right, look at this. 1, 2, 3. We've got them moved to the downside. Let me show you the higher time frame first before we talk about this structure, which is looking very corrective. Okay, I see some people are sending me private messages about the cost. So anything you want to know about the cost, just send me an email, then you'll get the information. Okay, that is, let's go look at the daily. Just remember, your background does not determine your success in trading. Okay, so this is the overall structure that we're looking at. Trading is so much more than just technical. It's very emotional as well. That's why even people who are very technical lose money with trading. Right, so we're looking at this as a 1, 2, 3, 4. Yeah, so 1, 2, 3, and then we're now looking for the downside here. We're looking for this bounce here in X. So I'm gonna go to this bounce in X because that is what is playing out right now. Okay, so let's go look at that bounce in X on the 4-hour time frame. Let's go 4 hour. So this structure is very interesting here. And some of you may want to go and look at my video, how to trade WXY like a pro, because we've got a good example of that right here. Okay. 1, 2, 3 to the upside. Now you're getting 1, 2, 3 waves pullback. You're getting 3 wave pullback like that. 1, 2, 3. If you look at my video, I say that this next leg, which is similar to this one, you'll find it at the 618 extension of this first leg. And that is exactly where it is. And now you're getting a correction. 10 lot sizes, 9 out of 10 chances you will get this trade to this level, to the one here. Okay, don't quote me on it. Market is unpredictable, but as far as the rules are concerned, as far as my research, 10 out of 10 times you will get the trade up to this level. But just remember, this whole thing is a corrective structure, and what we will be looking for is basically a big move to the downside. Okay, but this is one of those almost sure moves to at least 76, 78. Okay. All right, so if you get this trade, come buy me a Coke. All right, just kidding. All right, so that's what we're going to be looking at. It's ticking all the boxes. So if it doesn't play out, then we'll see why we didn't get it wrong. So let's keep an eye. We should not be afraid of being wrong, because all we're doing is applying the theory that is there. That is Audi US dollar. Let's look at New Zealand US dollar. Let's look at New Zealand. So in New Zealand, exactly the same structure as well. Let's get off there. So New Zealand, same structure. You're looking at this one, a three-wave pullback. Let's do it clearly. 1, 1, 2, 3, pullback. And now we're looking at this one, and this one to complete this 1, 2, 3 wave pullback, giving you a WXY move here. Just remember, this whole thing is a bounce. We've said we're looking for a bounce for further progression to the downside. Okay, the up moves are risky. Okay, so look out for that. That's clear. So you need to have a clear strategy and know how to manage your account when you trade those short moves like that. Okay, so we've done US dollar, pound, CAD, CHF. So CHF, another interesting one. If you look on the higher time frame, the last couple of weeks, we've been looking for this correction. Why are we looking for this to correct? Because we are looking for it to give us a wave 5 in the diagonal. Okay, we're looking for this to give us a wave 5 in the diagonal. You can see it's going down correctively. It can come back up, can do that, and then give you this overall structure here. So expect a bit of a sideways move here on this one. Okay, so what is that diagonal? That diagonal, we looked at it from last year. If you look at my videos from last year, they're not the best quality, but it's very clearly explained that we're looking at this as a diagonal. And that diagonal, since last year up until now, we caught it here while we were still here. It is still playing out. We've got the three-wave move down, and now we're looking for the three-wave move to the upside. Okay, so a correction here will take us further up. Okay, that is US dollar CHF. Now US dollar ZAR. US dollar ZAR, let's look at it on the 4-hour. I'm just gonna look at this piece. You guys know what we're looking at with the rest of the structure. Okay, I'm gonna go 4-hour and just look at the last piece. Last swing here. So this one here, we're looking at as a pulsing 1, 2, 3, 4, 5. Very clear. Okay, we caught it from right here at the bottom when it was still doing this. Initially, I thought it was just gonna do 3 waves like that. And then we saw it correcting here, giving us that one. Okay, it's just clear. We've got a pulse. You've got an expanding flat there. And then you get another pulse with lower degree corrections. Yeah, last week we said this can either be an expanding flat or a running flat. It looks like it's making a running flat for a wave 4. This is 1, this is 2, this is 3, this is now 4 that will end here. If this is a running flat, it looks like we're getting 1 here for 1 more up. So a break above this level here will take us for our wave 5. Okay. All right, so that's what you're going to be looking at on US dollar ZAR. Okay, so that's all the US dollar pairs. Now I want to do silver and gold also. So you see right at the bottom, I'm not going higher. I'm not going on the higher time frame more for most of the pairs, because most of that you can watch in the previous video as well to see what the overall structure looks like. So you see here, this structure looks similar to what we're looking at with the euro, pound, Audi, and New Zealand. It's a 3-wave up and a 3-wave pullback. Okay. All right. So we'll be looking for another 3-wave to the upside. So here's another thing, just for interest sake. I don't know if you guys know the 3, 7, and 11 trading swings. So if you look at here, this is 1, 2, 3-wave up and a correction, and another 1, 2, 3. If we count these waves, they'll give you 1, 2, 3, 4, 5, 6, 7. Okay, and then there's also a what we call a 11 swing, when you get 1, 2, 3, and another 1. And those numbers are one of those numbers that are in the Fibonacci sequence as well. Okay, I'll just of tracking a bit. So here, what you look out for is the completion. This correction is complete. It looks like an expanding flat. We were looking for upside like that. Okay, so let's keep an eye on that one. And that also is just a corrective structure. All right. That's gold, and then silver. Let's see if I've got any numbers here. If we go to the 1 hour, you'll see exactly what my structure looks like on gold. On the 1 hour, that's what it looks like. So we've got this one as an X, we've got this one as a W, and then now we're looking for that one to complete the Y. Let's just get that one close by. We're looking for this to complete this Y here. WX, I can't see where the Y is in red. Oh, there it is. Just need to bring it down here. Okay, and project the Y back there. So that's what you're looking at on gold. Non-real entry there, except for when it breaks out of these corrective structures. This whole thing is a corrective structure. So instead of, see, it's a clear 3-wave pullback. 1, 2, 3. Okay, textbook, and then up. So keep an eye on that. All right, so that is gold, silver. Let's go 4 hour. Okay, let's just show you this side here. So a bit of a move up, similar to what we're looking at on gold here with this structure. So what is the structure that we're looking at? We're going to show it with this. We've got one here. We're looking for this to do these 3 waves. Okay, and if I'm looking for that to do the 3 waves, I'm looking for this here 1, 2, 3. That will complete that move. Let's switch that off like that, and then internally here we're looking for this to do the let's see, 1, 2, 3 here. So that's why we're looking for this to go up here, because of this move here to come and complete that. So you can take a screenshot of that labeling that will give you direction as to what we're looking at. Okay, so that's silver, 1 more up. Still very corrective. It's a very corrective structure. So pretty risky structures here at this stage. That is silver. Right, so now we can look at the yen pairs. Looking at the yen pairs. So last week we were here with the US dollar JPY. We were here during this correction. We said we're going to drop. We only want a length similar to that. That's exactly what you got. And now you're getting this 3-wave pullback to the upside. Okay, so we need to see. This one is going to be a bit tricky because it's got an alternative count. It can either give you a 3-wave pullback like that and give you another green like that. Okay, let me just do it in green. And give you another green like that for upside. Okay, but if it does that, then it's going to give you this big green here, which is this big corrective structure for upside. Okay, or it can simply give you this 1, 2, 3 that may be a zigzag, but this is a little bit too shallow for my liking. I will expect 1 more up. Okay, so look at the structure that will develop here. If you get a correction here, you're going to get another 1, 2, 3, which is similar to this 1, 2, 3. Okay, if you get a pulse here like that, you'll look for this to do that. Come back here, up, like that. Okay, so a couple of alternatives here, but you'll have to wait. Okay, so it's a little bit tricky. Now, EURJPY. EURJPY, let's just take that off. We're already in this trade, and I want to show you a video that I did February 1923. You see here, I'm just going to play it and mute it, so you just can look. You can just look at the annotation. That was before we had this correction. We said we're looking for this big correction here. You can see that I'm showing that I want a bigger correction like that, and after that correction, I was showing you that I want it to move to the upside. Okay, so you've seen that. So let's go back. EURJPY, I'm going to go daily. And you can actually see the size, even the size, the accuracy of the size that I was looking for. This is how amazing this wave analysis is. What do we have now? Exactly as we have been predicting. So from the end of January, I was saying, even before we had this I was trading with you guys every single week as it was building, because it took a couple of weeks to build. This moved down, we saw it. This moved down, we saw it. Now look what is happening. Okay, now we're getting this move to the upside. We're looking for it to give us this move. And I remember doing a detailed analysis on this one, saying I'm looking for 150 overall eventually on this pair. But there are three things that the market is not. The market is not random, the market is not linear, and the market is not cyclic. That is why we get these moves doing this. Most of the time you will know where the market is going, but you do not know all the cycles and all the moves that it's going to make. So let's go to the lower time frame. Look on the 4 hour. Okay. On the 4 hour, something very interesting. Our famous blue box magic in play here, which we showed during our mentorship session in the week. Let's show it here. See here, if we project that blue box there, we can just do it again here. Don't ask me how that is done, what it's based on. That is a whole course from there to there, giving you that blue box there. That is the blue box magic, the power of the blue box magic. It just touches the blue box and reverses on those levels, fib levels. Amazing stuff. So now this thing has already moved 400 pips from the blue box in just a matter of 2 days. If you check here, it entered the blue box from here up until there. Okay, 350 pips. Same difference. Okay, so the blue box is amazing. So we are already now in the trade, but now we are going to have to wait for this to give us a nice correction here. Okay, gonna wait for a nice correction. If we're entering it here now, there's no problem, because it's gonna be a high probable trade for upside. Okay, they may even bring it back a little bit more, a little bit deep. That's why you need to wait for this to complete, but we're already in the trade. Okay, either way, we're gonna keep entering this until we get it to the upside, because that's what the sequence is showing us. So amazing, amazing these trades. Right, so CHFJPY, there's a clear advanced pattern that we're trading there. So CHF and the Euro are correlated, so confirming further upside here on this advanced pattern. Any corrective structure, you take it up until it breaks that top there. That is CHF. And then AUDJPY. AUDJPY. Okay, so AUDJPY, you have a pulse up correction, and now you're getting this one. Okay, this one is actually good to trade, to take at market open with your stop loss there to come and retest that top over there. Okay, so Audi looking strong. You've got a clear pulse in the correction. You can take this one. I'm not giving you signals. That's not what I do here. I'm just showing you market direction. All right, so that's Audi, New Zealand, JPY. New Zealand may drop a bit because of this diagonal that is forming here. May give you a one like that before it goes to the upside. So wait for the structure on New Zealand. That is on the 4 hour. And CADJPY. CADJPY. Okay, that's CADJPY. Similar correction like that, giving you a possible one to, we don't know if it's going to stop here or if it's going to give us a zigzag, so we'll see when it gets to that level. But if you get a correction here, you take it to that level. When you get to that level, you move your stop from to break even. If that is if you're not in the trade. Okay, that is all the yen pairs. Now let's look at the pound pairs. Oh, we didn't do pound yen. Let's do pound yen as well. So pound yen, a little bit tricky here because it looks like it is making a 1 and this one is a 2, and then We'll see if it's going to give us a pulsing move to the wave 3. Okay, so we've seen it do this move, a move like this before. Let's switch off here. We've seen pound do a move like this before. So if we get a correction here, taking it up, they're like, I'm expecting a move up because all the yen pairs are looking upside. Okay, so it may be a very shallow correction here. Take it up to that level. Okay, that is pound yen. Pound AUD. So pound AUD, go and watch last week's video. There's a very clear correlation between pound AUD and pound CAD. I'm not going to show it here because I've already spent a lot of, I spent the first half an hour showing you that Fibonacci relationship with the wave theory. So here on pound AUD, let's look towards the end here, you're getting this V pattern. Okay, so notice something here with the V pattern. I think some people may be getting this V pattern wrong, simply because you've not seen the characteristics and the behavior of this. So typically it will go up and it will come back down like this, right? And then after coming back up and then you've given up, that's when you're gonna get something like that. You're gonna get a correction and then you're gonna watch it go like that and you're not gonna be in the trade. So this may come back down here. It will come back down here. I'll be waiting for it to go to the upside. Okay, so there's a move like that has happened. I think it was Euro New Zealand. Let's just look at it quickly. That move on Euro New Zealand, and this is the 4 hour. It likes to do this pairs likes to behave like that on these V patterns. I hope I can find it. I hope I can find it there. You see here as well, something like that. You had this thing doing that. It breaks up like that. It comes back, makes 3 waves down here, and then because it's not breaking out, because you will have bought because it's breaking out of the part of the trend line, it comes back here. You can see that it's making a 3-wave pullback, and then it's just going to go like that. So because we know what it is doing when it does that, what it is simply doing here, look at this. It is simply doing a 1, 2, 3 up. Okay, we don't worry about that because you don't enter when it does that. You get a 3-wave pullback. Only then you're going to get a trade to the upside because you've got a 3-wave up and 3-wave pullback. Okay. So it's not the only time that it does that. If you look on this pair, it keeps doing this very same thing. So that was just an example. That is pound AUD that we're still looking at here now. So that V pattern, do not be surprised when it comes back down here. It can even go down for 1, 2, 3 wave like that. You get it like that. Okay. Let's look at pound CAD now. Clear relationship between that pound CAD as well. You're looking at this V pattern. All the pound pairs have got this pattern currently, and that pattern comes with strong divergence. Let's look at that divergence. You see it on the RSI and the MACD. See here, very clear divergence on the RSI. Okay, but that is, remember, that is just for a pullback. Okay, but that pullback can be very tradable if you get a nice correction like that. So that's pound CAD, pound New Zealand. Let's see if it's exactly the same structure as well. Same. This one has already even given you an impulse. So look out for a correction like that to the upside. So if you don't get a correction, like that, come back down here. You'll wait for it to do that again. You take it up, only up to that level. Okay, that is pound New Zealand. Euro, can I do the euros now? I think we're done with all the pound pairs. Now let's do pound CHF first. Pound CHF. So this is pound CHF. You can see exactly the same structure. I will not be surprised. If this comes back down here and does this. Because we're still very bearish here. And this one may even do that, giving you that something like that. So that V pattern can just be to start the formation of this flat correction here. But the next immediate move, maybe this one to the downside or a corrective structure for upside. Okay, so that is pound Swiss, pound AUD we did, New Zealand. Have we done pound New Zealand? Yes, we did. Now we can look at the euros. Okay, we can look at the euros. So the EURJPY, we've done EURJPY. I want to start with Euro Pound. That will complete all the pound pairs, and we start at the start of the euros. Okay, so if you look at this here now, it looks like a very clear 1, 2, 3 to the upside, and now you're getting this this one here, which looks like this. This one looks like a pass down. If I use green here, it looks like you have another 1, 2, 3 running flat, and now you're getting, okay, this one should actually be yellow. And now we'll be looking for this to come back down for this one, because this is clearly corrective. Okay, and there's a reason why we're looking for this to go to the upside on the higher time frame, which is this. If I just show you quickly, a pulse 1, 2, 3. What does that 1, 2, 3 look like? It is 1, 2, 3 there, and 1, 2, 3 there, and a 1, 2. We're looking for this 3, and that 3 will need to get through this correction before we go up. So it confirms. If you look at the labeling on that, it's showing exactly what the sequence is doing. That is what we're looking for. A 1, 2, 3 to complete there. So this is just a lower degree to complete the Y. Okay. That's Euro Pound, Euro Audi. Euro Audi has broken out of the diagonal. We're looking for this to make a 1, 2, 3, 4, 5. And after the 5, we'll be looking for it to give us a bounce in B for a further move to the downside. So we're just going to be looking for a structure like this. Now we're looking for a bounce in wave 4, corrective like that, to make the 5. Okay, I didn't show you guys how we traded pound JPY. I'll show you just now. Okay, so let's look at EUROCAD, my favorite pair. So all the pairs, even the euro pairs, we're looking for a bounce with these V patterns. You'll see they're all making these same structures, and we're looking for the same thing, which is a corrective structure like that to give us the X. And then if that is all we're gonna get, then we're gonna carry on with the move down. Okay, but this may go a little bit sideways. So here you're gonna get one more to the upside to complete this X, completing this move here like this, which is a 3-wave move, possibly an expanding flat there. Okay, when it starts doing this, we catch it again to the downside. But they're all showing strong divergence, and that is just for a bounce. Okay, but we take those moves because they are so clear. Okay, that is pound CAD, pound chief, sorry, euro chief. That's euro chief, and we'll be looking for this to give us one more up like that. Bounces. So we're looking for these bounces, regardless of what the structure looks like. So this one does not have a V pattern, but you can already see that we've got a move up. Now we're looking for this 3-wave correction here for a move like that. Okay. All right. That is Euro Chief, EURCAD we've done, Euro Audi, Euro New Zealand. Did we do Euro New Zealand? Let's look at Euro New Zealand. I think we have done Euro New Zealand. Euro New Zealand, now you're looking for this V pattern. Okay, so this one is coming back down here. We'll look for it to do that for this move. Okay. Okay, strong divergence all around for a bit of a bounce or a reaction. Okay, so that is all the euro pairs. Now let's look at, we can look at a few CAD pairs and then oil. Let's look at AUDCAD. Okay, AUDCAD. AUDCAD, Second week of May, you saw the move here. Pulse and a correction, said you should take that. And now you're getting this one here, which looks like a way forward, can come back here for this one. Similar to what we got on US dollar ZAR. Okay, but otherwise, any clear correction here, but I'm more inclined to this one here. If it does this here, you take this move. Okay, just be careful because you can do that. So if it does that, you still have an opportunity to take it when it does this. Okay, so out in New Zealand, we're still running this long. There's 4 hour. You can see here, you need to wait for this correction here for upside. Okay, so this is still actually an expanding flat, still valid expanding flat according to the rules. You can see that this looks very long, but it is still a valid expanding flat according to the rules. If we just do this here, check, it conforms exactly to the rules right on the 1,618. That's where the reversal is. So it is still a valid expanding flat. So we're still happy with that. Okay, we are taking it prematurely, but we're gonna now look to take it when it gives us a flag again. AUDCHF, same structure. It has made a 1, 2 like that, expanding flat. Now we've got a pulse. Now we're gonna wait for it to do this structure here. Okay, so what it looks like here now is possibly a 1, 2, 3 there that can do that. Even if it comes down there, we're gonna be looking for this to just complete the structure. Then you can just take it up. Okay, so oil. Oil, if you watch the webinars for the last 3-4 weeks or so, we've been looking for this wave 5 to complete, forecasted that way before it happened. Okay, so somebody was mentioning that I actually said 76. Okay, so if I did say 76 on one of the webinars, that would have been an error because according to the rules, this should clearly have turned here, and it is simply because of this rule here, fib rule here, which ends this one at the 1,618. Okay, so if I'd said 76, then that would have been a mistake. And remember, I'm doing a lot of pairs here, so I'm not going into detail, so I may have mentioned 76 incorrectly, but was actually incorrect, and I admit that. Okay, but you could see the forecast from when this swing started that we are going to complete wave 5. So even if you don't know exactly where it's going to turn, you know that when this is corrective here, when this comes down here to that level, you know it's clear. You can see what the direction is doing, which direction it's going. Okay, so now we are looking for this wave 4 in yellow. Wave 4 in yellow. Okay, just remember it's not about being wrong or right. It's about making money. I don't care about being wrong if somebody's telling me what the right way is. If that right way is going to make me money, okay, it will be foolishness to stick to my buys when I know very well that I'm wrong. Okay, because that's not the business that we're in. We're not in the business of being right or wrong. We're in the business of making money. So that is WTI crude oil. So what are we looking at? We're looking for this to make an ABC. Okay, we're already making a down move here, and that will possibly be making us that way further. All right, so that's US oil, and now we can look at the indices. Looking at the indices, we look at first. We'll start with the S&P 500. You must tell me if I've missed any pair that I usually do here. So these arrows, I've done them since the beginning of May, and I have been looking for this to go and test the top. If I just switch that off there, we were looking for this flag to break to the upside, and now it looks like it's starting to break. You'll see on the NASDAQ it has already broken. We're looking for it to come and test this level or even this level there. It is now starting to break exactly as we forecasted. Okay, so a break of this flag. I'm on the 8-hour chart now. I can look at it on the 4-hour as well. That is a 4 hour. On the 4 hour, it has clearly broken. It has clearly broken that flag. So we can take this one to this level first. In overall, we're looking for it to come and test that level. The NASDAQ has already broken clearly. Very clear break on the NASDAQ. So it's ahead. So we expect that the S&P 500 will follow suit as well, that flag. Okay. We've been waiting for these moves. You can see those arrows. We've been waiting for it to break to the upside. Now it has happened. Okay. Easy. Now this one is close to where we want the S&P 500 to go. So S&P 500 still have some room to travel to the upside. Okay, very clear. UK 100. So UK 100, we got this impulse last week, and we looking now for this to just correct there. So that correction will be going with a current up move with on the S&P 500 and the NASDAQ, because that can just be a three-wave move like that. While the others are going to test those tops, this one will just be crawling for this one, possibly for this one to the downside. So the others may come back down for this one as well. So this is clearly corrective at this stage. And the Nikkei, similar to the UK 500. So it's just back to the UK 500 again. UK 500. Where's my UK 500? So UK 100. So UK 500 is ahead of the Nikkei in that this one tested the top here. Tested this top. This is exactly the same top as you find on the Nikkei. And when it was here, the Nikkei was nowhere close to its top, but we know because this one was coming to the top that the Nikkei will follow suit. That's why when you go to the Nikkei now, you'll find that the Nikkei has also made the same turning point. And this is the Nikkei here. Okay. You see, so the Nikkei was nowhere close to that turning point. So, but because UK 100 was already at the top, we knew that they were all going to make that move. That's how you work with correlation. So now it looks like it's making this V pattern here, similar to what it did here on a smaller scale now. Okay, so let's check what happens here if we're gonna get a bounce to the upside. Okay, all right. So that's the Nikkei in the DAX. Somebody wants the Dow. Okay, let's see if we're gonna have time. Right, so we similarly here, we get a 1, 2, 3 move down. We can expect a 3-wave pullback here as well. Okay, on the DAX before we get a move like that. Okay, you get a clear 1, 2, 3 on the DAX. You get a clear one pulse here. We get a lower degree 1, 2, 3. So you need to get a move like that. So this crawling up will be correlating with the rest of the indices for those up moves. Okay. All right, so somebody has asked for the Dow. Let's do the Dow and the Nifty. So the Dow will be similar to the S&P 500. So you see here, 1, 2, 3 here, we're getting this one. It has already made a passing move to the upside. So this one will come and retest the top here. We'll be looking for this to come back here for that one move. Possibly come do this one before we go up. Okay, so keep an eye on that one for that move to this level. Quite a number of, it's not a few points, it's quite a number of points because this is a 4-hour chart. Okay, so that is the Dow and the Nifty. For those who are interested in the Nifty. All right. Nifty, same, expecting to crawl up to that level. Okay. Okay, but it looks like, let's look at the Nifty. I trade stocks personally as well, and I use the Elliott Wave theory for stocks as well. Okay, so this one like that. So it may come back for this one, giving us this 1, 2, 3 wave move. Okay, we need to watch what happens. We are not bearish, we are still bullish. It's just we're correcting here like that. Okay. Not now. I've spent half an hour doing the relationship between Fib and the wave theory. Not today, maybe some other day. I will not have time to do Facebook today, unfortunately. Next time. All right, so let's look at the cryptocurrencies. Let's look at the cryptos. Bitcoin. Let's switch that off. So Bitcoin, 1, 2, 3. I do this almost every week. So now we're looking for this one, and now we're looking for this 1, 2, 3. We want it to come test this level. Possibly come here. You can see here we're correcting here with this level 1. So it does not mean it's going up. It may come back here to this level. If it comes there, it could do this move here, like that, before we get the red. Okay, so the next immediate move is this one that will retest the top. If we break, we only come into retest the next level there. And if it does that, if it retests that next level, we'll be looking at a move like this. Simple, does not change anything. It's just within the structure. It just comes and tests. Simply means that your red will only start from here. And overall, if this is a sideways correction that we're looking at here, you're going to have the cryptos losing a lot of value in the days, in the months ahead, looking for a move like that, similar to this one here to the downside. Okay, and I'm looking for the same on Litecoin and the rest. Okay, it's exactly the same structure. 1, 2, 3. Sure you guys are tired of this, because you see it every day. 1, 2. If we get this one here, we want it to test here. We want it to test there. If it does, same structure, then we get something like that, and then that, and that will be a whole sideways correction like that. Then we'll expect this move to the downside, similar to that one. Okay, so I've been saying on Ethereum also, Ethereum is a move behind. You can see the others have done 1, 2, 3. They've already done this move here. They've already done 1, 2. Okay, they've already done this move. So they've already done this one, and now they're coming back for this one. This one is still only here. So we expect that this one may still break to the downside and come complete this and follow the same trend as the others. Maybe even come back there. 1, 2, 3. Okay, so a lot of sideways moves on the cryptos at this stage. Okay, so by the next immediate move, it looks like there's a short upside looming on the cryptos for the week ahead. Because you've got a pulse, you've got 1, you got 2, you got 3, and now you're getting this one. You should get another 3 here like that. If you get like that, you're gonna get a 1, 2, 3 like that. That will come back to that level, up like that. 1, 2, 3 down. Simple. And lastly, Ripple. Okay, Ripple, similar to the rest. Same pulsing move to the downside. 1, 2. Okay, possibly come and retest the low here. It did not test, it hasn't tested the low as yet, so it may still happen that we get that move like that. So if we get a move like that, then we'll expect this to give us this move. Okay, so that's all I had for you this week. I hope you enjoyed the webinar. Please like, share the videos, subscribe if you haven't already done so. Good luck in the week ahead. Make lots of money. Thanks for attending, guys. Cheers. Bye-bye.